It's a critical component, and it's also the most interesting part of our role is going out in the field and doing primary research. Not only interviewing the companies that we're invested in, or particularly new companies, but looking at their competitors, looking at industry structures, interviewing industry consultants, interviewing regulators, and having that broad spectrum of different views, bringing all of those together helps us sort of generate our ideas and our thinking about companies that we have in the portfolio. The first one was Brambles, which is Australian listed company, but primarily has the bulk of their earnings both in North America and in the UK and Europe. And they're a very interesting case study because they're critical in supply chains, and so they give you a very good litmus test of what's happening in underlying economies. And it was very clear from our discussions with them that economic activity had slowed, particularly in Europe, where they were very much more sensitive to exports. Economic growth in the US had also slowed, but from above trend levels back to sort of more normalised levels. And the way that they were approaching difficulties in costs in both labour, transport and energy, and their ability to be able to pass those on through to their customer base. That was the first company. The second company was CSL, and particularly Seqirus, which is their influenza business. CSL has got a long heritage in influenza vaccines, but they made a significant acquisition at the end of 2014 where they bought a business from Novartis. And at that time, that business was loss-making, but it had world-class research, particularly around cell-based influenza vaccines. And through CSL's industrial focus and efficiency of capital, they have instigated a remarkable turnaround in their earnings profile. So where it was losing circa 245 million USD back in FY16, it is now expected to be earning around $200 million in FY20, or an EBITDA margin of 20%. And the third company that we saw was Ocado. Now, Ocado are an online grocery deliverer of products, and the relevance of Ocado to Australia is that they've formed a joint venture with Coles to build the first online distribution centres for them, one in Melbourne and one in Sydney, using robotic technology. And what we were trying to distill was whether you could actually generate sufficient returns and earnings and actual earnings growth from online grocery compared to the physical store, because at the moment online is at best break even compared to a 3 or 4% EBIT margin that they're achieving in the physical store network. And so insights on how they were approaching their market and their confidence around it of being able to lift returns in online was particularly interesting.